Welcome, your trading lesson of the day. How can you make money off economic releases? Inflation's a big deal right now. CPI, PPI, what is the Fed going to do? Where are rates going to be? That's a big one in these markets. Whether it's labor data, you want to get that jobs report out there and try to take advantage of it. But the thing that everyone always gets trapped on is you get that expectation that fundamentally whatever makes logical sense with regards to an economic release is what the market is supposed to do. You cannot get married to that notion. You've got to have the ability to be mentally flexible and understand the market's going to go any way that it wants to go. You've got plenty of time to gather information when there is an economic release, especially the 830 ones, which is what I'm going to focus on before you get into the open. So I'm going to give an example based on today of what happened with the Qs. We had a CPI report and inflation came in a little bit hot. Now you would expect inflation's hot, higher for longer, not good for tech, not good for the markets. One would naturally think, well, the Q should go down if it's a hot number. Well, that's not what happened here, because what ended up happening was a spike to the upside at 8:30. Now there's one line you hear me say in the live show every single time, and I usually tweet out the same morning as an economic release. Do not overreact to the initial move. Just because the first move was down, if you just start turning all bullish, the market hasn't even opened yet. We don't have any opening volume. So if you looked at that first initial move and you're gathering information, there's a few points that are going to come out when we're talking about individual stocks a little bit later about gathering that info. If you're not long on the initial break and you don't get something right away, and you probably weren't looking long on that hot number, then a lot of times you can be wondering, where is it going to start to make sense? Well, we top out here 441. By the time you get to the open, you're then rejecting a lower high, and suddenly you're following the initial plan, which was, hey, a hot number and we should have a little bit of a falling market. So if you marry yourself to the first move, you end up getting in at highs, or you could be getting in the pre-market. By the time it gets to the open, it's actually looking like a bit of resistance has gotten put in there. So never chase that ridiculous first move unless it's showing you trend, right? So the initial move does not show you trend by the time it gets to the open. If anything, it was lower highs. That can be what patience rewards you with. You then see that lower high at the open, and you could have probably smashed at least a little bit of a short through the low of the day. But the one thing that I think you always want to do here is look for relative strength and weakness. Because I'll tell you, I'm showing you the NASDAQ, I'm showing you a high and a lower high. But if you can go into information gathering phase and you're patient and looking for that better opportunity, then you might find something like this. Initial pop at 8:30 in the market, Microsoft goes up. When the market flushes, Microsoft barely breaks that low. Remember what we saw with the Qs there. So you broke the bottom underneath that data release number and then continued lower in the NASDAQ. Instead, Microsoft at the open has already bounced off the lows, and at 9:30, it's breaking out the tops. So when the market's failing back in, Microsoft is breaking out past what level? The release high. Now, when you have data releases, what the first thing that's going to happen at about 8:29 is bids and offers are going to drop. Anyone watching a level 2 is going to see spreads open up. You're going to see the algos not making markets. You're going to see a lot less liquidity than normal. Then when the release happens, you're going to get momentum into certain levels. And where there is a market again becomes good information in key technical levels. And that's what ends up being provided to you with Microsoft. Because when it made that top after 8:30 on CPI, this ends up being the perfect place to look for the dip back in. Now, when it broke the highs and the NASDAQ was going down, it established itself as strong because it was going counter trend to what was that lower high setup on the Qs. Then when it bounces back in here, you see it try to get back underneath the CPI high, I'm going to call it. There's your wick under, and look at the tremendous amount of follow through when it gets back above that high. Now, if you're in information gathering mode, you can scan stocks, looking for relative strength and weakness, something that didn't drop as much as the Qs did, as I showed you, like a Microsoft, then look for that key level to set back up there again. It's about 407.5. And then suddenly you can find your way into a better trade. Now, there were obviously some good longs all over the place. I mean, I could point to something like NVIDIA, which is a similar setup, but Microsoft, I think, technically was a little bit easier. The other way to look at it, Microsoft, of course, being relatively strong at that open, NVIDIA wasn't necessarily. However, once again, what's the level we're looking at? We're looking at the resistance on that 830 number. The top on the 830 number was $882 on NVIDIA. The top at 9:30 at the open was $882 on NVIDIA. The high at 10 o'clock was $882 on NVIDIA. Well, what breakout do you think did it accelerate through? 882. So if you take a step back, you don't have to overtrade these. It set up a level. Now, it didn't look relatively strong at the open like Microsoft did, but it provided you with the level. Once, then you saw it again, and you waited for it, and then when 82 broke, off to the races for NVIDIA. So if you wait for key levels to be shown to you when an economic release comes out, suddenly you're going to have a bit of a blueprint to trade after the fact and get these explosive reversal trades. Now, it's not always all roses, because you're going to find situations where the exact opposite happens. You look at something and it's just it's relatively weak. Everything about it sets up the other way. AMD at 8:30, you had the pop up, it makes the high at about 202, it rejects the high again, and then look what happens. When the market rallies, this thing can't even break back above previous, a relatively weak name. Now, generally speaking, I'm going to look for follow through, gets under VWAP, breaks that local bottom here. I'm looking for a consolidation to short. I'm thinking it's going the other way. I'm thinking NVIDIA is along at that point. I liked it, and obviously there's both in the chip space, but the setup is the setup. It looked relatively weak. It's okay to be wrong. It's not okay to stay wrong. Once it violated my rule of getting back underneath or above that support, I'm going to jump out of the trade and then do what? If I'm bearish on it thinking it's relatively weak, nothing. Not until it goes back up to what level? The 830 CPI high. When it gets up there and shows me a wick top, then you can try shorting it again. And when it breaks it, get out, back underneath, short that. So let it set up that key price level. And there's a key here. Every single one of those trades is keyed off of the top of the move at 8:30. And I said at the beginning, do not chase or overreact to the initial move. If you're hitting that high on any of those things, it ends up being a top multiple times. Eventually it works for the longs, but it's the worst spot to have gotten in. But if you key it off and look at that level later on in the day, it ends up setting things up for you and gives you obvious trading levels to get behind. Trading is all about timing, reasons to enter, reasons to exit. When you get an economic release, especially at 8:30 in the morning, you are gifted information by the market, and it's your job as a trader to try to use it to your advantage. So don't chase the initial move. Look for key price levels, tops and bottoms, that then hold up multiple times in the opening range. Look for relative strength like we saw with Microsoft on this particular release. Look for breakout setups, double, triple tops or bottoms off those key price levels, and then that's where you're going to find your alpha. So in trading, everything is about information gathering and utilizing it to your advantage. No different here when you get an economic release, whether it's CPI, whether it's a jobs number. Be sure to be patient and take what the market is going to give you, because the market's giving you opportunities every single day. That's your lesson of the day. Trade economic data and economic releases with better success by being patient and following those steps.